What's up, traders? Mark Bauman here, StartTrading.com. Welcome back to Start Trading. We are talking about today recuperating our losses from this terrible year we're having. Start to 2021. COVID's still running rampant. Inflationary scares are happening. The 10-year bond yield is shooting up, and it's probably going to happen possibly again next week. Probably next week, and then maybe the week after. So, how do we plan for that? Well, tomorrow you're going to see an uptick in a lot of your stocks. So you'll see like a quick rebound, probably like the week before. Maybe you'll see it going to Monday, maybe not. But what I'm doing, what I illustrated today on a video, which will be spliced into this actually, which you'll see in a minute, is I took some of my either performing or higher dollar value holdings that I have of different stocks, and I sold off a portion of them. And I did it mathematically in order to buy back in 10 times that amount. So, for example, for Disney, I sold out at, I believe it was $179, maybe $180 a share. And I plan to repurchase, actually sold it over here. I think it was, around 178, 170 a share. And then I plan to repurchase down here when it dropped down to 176. Now it's down 171 after hours. So, my plan is to buy another option of Disney. Now, what I did is I sold 20 shares of Disney, which allows me to buy actually 2 to 3 options of Disney at its current rate. So at the current price of just 20 shares, you can buy 300 shares of Disney. And you can buy those 300 shares of Disney for where the option doesn't exercise until January 2022 or December 2021. That gives you a lot of room to recoup some of those losses you may have incurred from the big sell-off that's been happening over and over with excuse after excuse why it's happening, blah, 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 blah. But let's face it, we had a big pandemic. We had a big rise in the stock market during a pandemic. None of that makes sense. And we're seeing interest rates are going to rise because all the money that was given out. Inflation's going to rise. It's just everything's going to go pop and stocks are going to go pop, plop. Anyways, so what you're going to do is put this into practice. Take a look at some of your stocks, your bigger holdings. See how many you can sell off of that stock. Don't sell out that stock. You can literally sell those off, even if it's at a loss, and you can rebuy that. You rebuy 100 shares of it. So if you have 100 shares of a stock, those are probably worth, $1,000 or $10,000. You could probably buy an option going into January 2022 when these dips are happening, like either tomorrow or next week. If we have another dip Monday, Tuesday, Wednesday again, or maybe you get skittish and we have a dip Monday and Tuesday, buy in Tuesday, maybe there's another dip Wednesday, but it'll pop back up Thursday or Friday. So that's my advice to you. Go ahead and watch the video, see what I did, and I put my money where my mouth is. Again, this is not financial advice, this is pure entertainment. Time to get it, and happy trading out there with your options. So here's what I'm doing right now. I'm selling, take some profits, some of my shares here, like Caterpillar, and I'm going to buy some options. So let's take Caterpillar for example. I freed up $5,000 in capital. I'm going to buy options into January for Caterpillar. Let's do, I think by then we should see probably 260, sure. Looks pretty consistent, Caterpillar. It really started having a run in March 2020. So hopefully that's not going to negatively impact them, but they were kind of just prior to that chugging along. So I'm going to replace my current positions with just 2 options. And those 2 options are going to be more profitable than my current positions and cost me less. So I'm freeing up capital, freeing up margin. And I'm just going to buy 2 options going into next year, assuming their trajectory is going to continue. Now, they had a run up that kind of came down. So last year they peaked in January, and they actually started their run in 2016, and then peaked. They had about a 2-year run. Let's see where we are now. Started their run in 2020. And so in January 2021, so of course a crazy year, they should be peaking. So maybe we'll change that to, let's peak it through January. Yeah, let's do that. I like that. And their run up was from $71 to $158. This time it's from 116 to 200. Ooh, they've already hit their double. So there's a little bit of a risky position. But the come down, they never came all the way down. Maybe 10% if they start just flopping around here and not really making any headway. So we still have a little bit of ways to go and on into January. Looks like they also had a little bit of plateau in October. What their June was. Now this is of course an extraordinary year, so it's hard to tell. But it looks like their May was also not great. But Caterpillar again is a consistent company, also a technology company in what they do. And let's see, let me go back to choosing those options. It's 260 too far outside the realm. Another 10% between now and January. I don't think so. So I'm going to go, oops, I picked the wrong one. I'm going to be buying, not selling. And I'm going to go for the best price I can. Last price was $14.32. So let's go with $14.32. See if that gets us two options. Actually, yeah, I'm going to buy one now. And then one after I see some sort of dip. Yes. Now, next on my list is Boeing. Boeing, I'm going to wait to buy. We sold 100 shares. I'm going to wait to buy that after the dip today. I believe the stocks that had a little bit of a rebound today are going to go back down. Let's see, TQQQ. Little false pop today. So I'm going to sell 10 shares of TQQ. Let's see what the option cost looks like. TQQ. Options in TQQ going out to January going to cost me $1,800. So I will have to sell. Actually, I'm sorry. We sold part of our 20 shares of TQQ yesterday, so I'm free to buy that option. I'm going to wait on that. So let's just sell all the position. That's one of my another pop. Let's see. Oh, sorry, starting to decline. Okay, so we'll come back to TQQQ. Let's see, waste management, Etsy. Let's go with, let's see, Baba. Baba's still going to have more of a decline. Disney, let's see, where in the portfolio I could sell, get the most opened up, because I got to recover some of these losses that have been going on. I think Disney, yeah, Disney. Oh, I see one, not selling that. Planning on making a 10x on that one. Waste management. Take some of the profits there, as well as buying a option. And TMV is coming up. So TMV is on the rise. There's a 10-year bond yield. It's on the rise. Okay, so let's go with SDGR. That's a good one too. All right, even though it's in the red, let's sell some just to buy the option, because I want to recycle here some of my positions to 10x potential and free up some margin. So I can basically sell. So what happened with CAT, for example, I sold 20 shares and I bought the option to buy 100 shares. So literally I just doubled my position while selling 20 shares and take a little bit of profit. So I'm going to do the same here with Disney and waste management. And for now, as far as selling, I'm not going to buy these options until after I see the dip today after 9:30, which is about 5 minutes. Pacific Standard Time, 12:30 Eastern. So you'll see that they
the increases are start diminishing. It's like, okay, so let's sell Disney first before, so I can stop talking and start putting my money where my mouth is. Disney option. Let's see what Disney options look like at 2021. Good. So I need 3,000 freed up. In this case, I want to free up more because I want to bring down the margin because stuff's getting crazy out there. Stuff's getting crazy. So, 35. I'm sell 40 of it. So I'm going to sell 40 shares of Disney at a slight loss. And I am going to buy this option later in the afternoon. Okay, so freed up some more margin. Now I'm going to buy some. It's going to be great. If you watch my video, please check out NeoV. Waste management. So let's sell some waste management. How much do we need to sell to get double our margin back, but reclaim 100% more of our shares? Oh, look at waste management. This thing's cheap. 5.8. Oh, it's for the bearish. Okay. I mean, waste management just keeps on racking up fees. This guy just keeps going and going and going. Did a slight decline 2020 to 2021, but now they're on the uptick. Let's look at the 1 year. Now they had a big dip in October 2020. I'd have to look at what that catalyst was, but otherwise, they have a consistent run in a inconsistent market. 98 to 115. Oh, they're on a good run right now compared to normal. I think they're going to continue to run during this downturn, and I think I'll buy it out to January just to be safe anyways. Yeah, so let's still sell, let's see, 30 shares. That's double, it's 4 times what I need. Let's go 25 shares. 140. Wish they would show the amount of shares in the total portfolio as you're selling them so you can remember how many you had. I'm bouncing around too much. Let's see. 40.86. Get that extra penny in there. So 3,500. Waste management sold, and again after the 930 drop. If it's not fake pump, I'll still gain anyways later in the day. I save my money before the drop. Did I do my Disney sell? Okay, so next on my list, let's see, we have Baba. Baba is on the decline, so today, hopefully this pops back up. Let me come back to Baba. PSEC. Okay, and try to sell the profitable ones. So I can buy more of those. But you know, there's some high market values in the negatives. Look at all these, a lot of red lately. Like we can reinvest into like FE. It's good. CD Sciences we can't. Baba basically is the only one. SDGR. SDGR. Let's do NCLH. SDGR isn't up today. I'm trying to get the ones that are up. Let's do PSEC. Close some PSEC. Try to do the ones that are up before they drop back down. So they had this recovery this morning. It's almost dropped a little bit already. It's like kind of a slow, steady recovery for this particular stock, but some of the other ones have a bit of more of this happening. And up and down all the way throughout the day. So 930 is right now. A lot of these will start declining, or even before. Let's see, so I'm not going to sell 1,200. Sell 200. There we go. Because how much is... Let's look at this. nice. So in one day, it's already up 2%. So it could drop back down 1%. Like it might only gain 1% by the end of the day. But we'll see. We'll come back and check on that too. PSEC is up 2.7%. Oh, look at this. And to buy some options, we can buy like 10 of these options. Let's see how much I should buy. So 10 of these options, I could double my position for another 1,000 shares. Well, I saw these 200 for $1,500, and it'll take me through to the end of the year, so I have more time to see the market change and decide what I want to do. So I'm going to sell 200 shares here. Let's see, 783. Yeah, that's a good rate. 72 to ensure they sell. Let's go for 73. Okay. Okay. We are now down to 67,000. The margin balance. Should we eliminate the balance altogether? Maybe. Let's see, UDAO is up 4.3%. Let's see, let's tackle UDAO. How much is an option in UDAO? An option to September 2021 or December. It's about $2,000. Okay, so how about we sell out of UDAO and buy an option today? Yeah, let's do that because we can get one option and have four times the amount of shares we have now, eventually. And I don't really care to hold the UDAO as a stock. It's really a marginal benefit to me. So let's do add to position. All right. So 6 month. So here's UDAO here. I have this dip, as it always does. And then it always recovers and keeps going higher. So we're just in this little bit of a correction here. It could be a bigger correction. So you gotta be careful of that. So I am going to sell. Let's go back to our positions here. And this account was at $200,000 at its peak. It's killing me, these drops. And it, to be honest, there's also some bad bets on my part in regards to options. Buying options. So UDAO, let's close this position. So what do we expect to happen? A little bit of a pop back and more of a dip. I was like, it can't be that much more of a dip. I expect it to go to 150. So our target price there, one option, 150. Or 150 is the target, and we expect it to go within the year to this 40% increase. Let's be conservative and go 30%. So I'll kind of go with that. Okay, so I'll sell all of these shares and buy back in. Oh, still rising. That's surprising. Okay, sell those shares. Filled. I got my contract with Caterpillar to 2021. Let's see. I wonder if that's already profitable. Let's see. Let's see how's my short on Qualcomm going. Not great. Down $161, but again, Qualcomm picked up this morning, and I think it will drop off by the afternoon, so we'll see. Plus, I'm still hedged with June 18th, 2021 call on Qualcomm. I was not expecting Apple to pull out. That was pretty bad. Let's say Caterpillar, all right, that's May 14th. Okay, that still could come back and hit what it needs to hit. Just search its 2-minute. There it is. There you go, Cat 2021. Oh, good, we're up $7.50. Woo! All right. So, let's see, what else were we going to sell? We didn't sell yet. Look, and this management already started declining on their gains a little bit. Oh, Starbucks, that's right. Starbucks is up. Let's take a little bit of profit while it's up on this pop in case there's another dip. And RIOCF is great for dividends. That's not what I'm looking for right now. FE, also great company. Let's see, FE, RICF. Let's go with Starbucks. Way more of a recovery stock. And CSWC. Let's see what CSWC is. Wow. Okay, super cheap. All right, so we could sell 50 shares of this. I sell 100 because we're going to buy 100. So we're going to buy 100 because, again, the option is 100. And this is typically what CSWC will do. Let's see, June, May, June. That will decline going into July. And then you see this run up again into January. Okay, so yeah, we hope to see that same pattern happen again. So we're buying a little bit early, or maybe we're buying at the right time. So basically, you might see a run up and then drop on a lot of these stocks, or because of the current climate, you're just going to see continuous drops. So let's go ahead and get out of our position there, and we'll buy CSWC. I did not track what was the position I want to get in at. CSWC, one option. So if I do 3 options on that one. Let's see, the target price is 23 or less. And we want to see, let's see what kind of return, 12.93. So we could see 100% return there. So let's do 80% to be conservative. And go from there. All right, so we have our 100 shares sold there. It's never too late, never too early to get into an option of that length of time. The whole market would have to go down for us to lose on that one. BABA already sold out some shares. We're only down to 35 shares. We sold off 100 shares. So again, I'm going to buy into this more towards the end of the day. If it's going to have a pop, it's going to have it at the very end of the day. Oh, NCLH, that's right. NCLH. Yeah, I kind of want to cover some of my losses there. Let's see what's the trajectory right now. Pop this morning, it's back down. Not much of a change there. It's come up a little bit. It's the last dip they had. Also did the same thing, and then went back down, a little further down. So let's go ahead and sell rather, 100 shares here, which will allow us to probably buy in more than one option, which I will do one now and one later. Yeah, we can buy, even if it's at this current target price, we can buy 3 options and still have double our margin back. So let's sell that. So NCLH, let's get 3 options. And really we'll just do it at the target price of $26 or $27. And we expect to have a 100% return on NCLH because that is a recovery stock. Okay, now Disney. Disney is also one I'm going to sell. Just part of, again, because I want to just get some of my shares back. I'm not very triggered still. I got to check my orders and see what filled. But basically, all these have triggered sells. Even some of the other ones, I'm going to load up on options to regain those funds. Now, you saw, let's take a look at Disney, for example. But as we were looking at CSWC, you saw there's possibly going to be another decline in July, because you have this period here from June till August, where stocks just drop. So in June, so we might have a little bit of a rise between now and June, and they could drop and then not see a pick back up again until August or September. Now, if this is all haywire, it could be that this little dip in May was actually, we had it sooner. So this June 9th dip we might have just had early. Let's see if we can see on a 3-year. So yeah, here's April. Yeah, April. There is sometimes a big dip between May, but yeah, typically it's June to August. So what we'll see is this drop, and then it'll pop back up, and then it has another drop in October, and then has a run. So if we go into January, we'll be able to take advantage of all these gains. So 106 up to 189, Disney looks like a possible 100% return, and it's a solid company, and there's so much revenue. It is ridiculous. So let's sell enough to get 2 options and in the 178 range. So do we want to sell today is a question, or do we want to sell tomorrow to buy our options? Do we just buy our options today and sell tomorrow because we believe it's going to go back up? It's only down $1 on the 5-day. Before, it's really at its lowest point since January 27, 2021, 163 to 178. Basically $10. So the potential increase is going to be a 160, 170, even if it goes 163 down to 200, up to 200 or higher, because there's a lot of bent up demand in the market for consumers, especially for something like Disney. Like who wants to go to Disneyland and hasn't been able to? I mean, come on. So anyway, so that's what I'm going to do. I will buy. See what the options look like on Disney right now. I'm going out. Well, it's on the down. Let's go around to January. It's probably going to be expensive. Disney's solid stock. Oh, nice. So if we sell $3,000 to $6,000 worth of Disney shares, we can get back. Let's see. So let's do. So we sell 20. All right. So 3,500. So we can double our position, triple our position in Disney by just selling off 20 of our 70 shares. Still maintain 50 shares. Maybe we'll sell even 30, so we get back some margin. And we have the option to buy even more options later in the future. So Disney, 2 options, 178%. That sounds about right to me. So let's go. We can go with 180 or higher, depending on what are our options for these options, which is, let's see what the other options were. Yeah, I'm going to go 185, 190. Really just lowers your cost in the option, and your returns are still going to be higher. So we'll have open interest, tons of open interest for this one here. So maybe we buy this, and we buy 2 of these, and basically that's the same cost. So about 300 shares for the same cost, but we're just selling 30 shares or 20 shares for. So the question is, do we want to sell today? We'll definitely buy an option or 2 today. I don't know if I'll sell Disney stock today, because I think based on past, it's going to have to come back up a little bit. So that is it for today.